Hello, and thank you for attending today's webinar titled Avoid an Audit, 5 Steps to Tax Compliance Done Right, excuse me. I'm a marketing coordinator. My name is Jared Gator. Before we begin, though, I'd like to cover a few housekeeping notes for you. So at the bottom of your screen, you'll see multiple widgets in which you can move and resize to customize your viewing experience. For example, if you'd like, you can enlarge the slide area by clicking the arrows in the top right-hand corner of the widget. If you have any questions throughout the duration of the webcast, you can submit them via the Q&A widget. We'll do our best to answer them during the webcast itself, but if fuller answers are needed, or if we run out of time, please note that they'll be answered later via email. We do capture all questions being asked. This webcast is being streamed through your computer, smartphone, or tablet, so there is no dial-in number. For the best audio quality, please make sure that your speakers or headset are turned on and volume is up. Some networks can cause the slides to advance a little bit more slowly than others. So if you're logged in via VPN, it's recommended to disconnect from that throughout the duration of the webcast. You can also try refreshing the page by pressing F5 on your keyboard if the slides are out of sync. We do encourage you to use the most current version of your browser to ensure that you have an optimal experience today. You can also find answers to some of the common technical issues inside the Help widget located at the bottom of your screen in the On24 toolbar. And as a quick reminder, this webcast is being recorded, so you will be receiving a link to the recording later today via email. With all of that being said, I'm going to go ahead and advance the slide here and introduce you to our presenters today. So we have 3 presenters that are going to be presenting for you today. We have Terry Shavel. He is the National Sales Manager for Construction Real Estate Division here at Aktion Associates. We also have John Regan and Evan Owens. They both have the same title there, being a Senior Strategic Alliance Manager at Avalara. As far as our agenda is concerned for today, though, we're going to talk about the Aktion and Avalara in general. We're then going to go into the new legislation and economic factors on tax compliance, talk about the 5 steps to managing tax compliance, tips to streamline your tax compliance process, and end with about the last 5 minutes or so of today's half-hour session for our Q&A. At this point, though, I'd like to go ahead and pass things over to Terry. So Terry, whenever you're ready, please feel free.
Hello and welcome. Kudos first off for Jared and team to only give me 1 slide. That's really, really intelligent of them. But I'm going to go real quick. I'm not going to just read these to you. I'm going to go over them, a couple of them, really focus on one of them, mainly about Aktion, a little bit about Avalara. We'll talk about them here in a moment. But we've got about 200 employees here at Aktion. I think we're sneaking up on 250. Got about 6,500 customers. 2 company-owned data centers, one just outside of Toledo and one in Charlotte. And you can see in the upper right-hand corner there some of our recognitions from different publications and such. But the main thing I want to focus on is that the middle bullet point there, that as well as the partnerships down in the lower right-hand side. And that's kind of what makes Aktion unique as a reseller, as a VAR. And what I mean by that is our diversity. So you can see lower right-hand corner, partnerships down there. We service and sell multiple different software platforms. And looking at that middle bullet point, we service multiple different industries. So that's a really important part of Aktion's business model, our diversity. And that is the main thing, I think, that makes Avalara such a logical partner for us. So Avalara, for those that don't know, I assume that if you're on the call, you know who they are, but they provide sales tax automation across multiple industries, multiple geographies, multiple products, and multiple platforms. So again, when you think about our business model, it coincides their business model, so they complement us quite well. So we've got folks here inside of Aktion who have been trained up to be able to service and implement Avalara, and they have become a really important partner, and I anticipate that they're going to become even more important as we continue to grow. So after the webinar, we're also going to have a Q&A section, but I would encourage you guys to go ahead and reach out to your Aktion sales person. If you know who that is. If you don't, reach out to me, certainly. But without further ado, I'm going to turn it over to John so he can explain to us how to avoid an audit. John?
Thanks, Terry. Appreciate that. And we appreciate our partnership. We've been allied for, over a decade, I believe. And we, like Terry said, we do connect into every software platform that Aktion is involved with. So it's a really great partnership that we're really thankful for. So just a little bit about Avalara. You've probably used Avalara in the past few days or weeks and maybe not have noticed it. If the most common example would be if you're online and you're purchasing something. I mean, who doesn't purchase online anymore? And you're online and you're in the shopping cart experience and you tell the software which item you want and where you want it to ship to. And then you blink your eye and then all of a sudden the freight and the tax have populated into your shopping cart. Well, that tax rate and number could have come from Avalara. So that's the most common example of using Avalara that I can think of. And that tax rate calculation that we provide often. As this chart shows, these are numbers from 2021. So we're probably near 40 billion in tax calculations annually per year. We also process tax returns for companies. We automate that entire process. Probably around 5 million tax returns annually now. We have over 30,000 customers serving probably close to 100 countries at this time. So I'm really glad that you joined us and dedicated your time to this morning. For the next 6 hours, we'll let you know everything you ever wanted to know about tax compliance. That's a joke, I'm just kidding. But no, for the next 30 minutes, we'll touch on things that you need to know about tax compliance to help your business run more smoothly in terms of handling this requirement from the government and doing it right. Tax compliance is something that a company can't avoid. You have to pay your people, and you have to, on the tax compliance side, you have to either collect and remit sales tax to a state, or you have to prove you're exempt from doing so. It's a statutory requirement, and you can't get away from it. Over the past couple of years, there's been some major legislative and economic factors that have really hit the tax compliance world hard. They've turned it upside down, and a lot of companies are trying to handle it, trying to deal with it. A lot of companies haven't got up to dance to the new tune yet. They aren't aware of the changes, or they're just not there as far as dealing with it. So let's look at what started it all. Back in 2018, there was a Supreme Court ruling, South Dakota versus Wayfair. You may have heard of it. Bottom line on this is that the ruling changed the foundation upon which a company's nexus is determined. Nexus is a fancy word for a company's tax obligations to a state, its obligation to collect and remit sales tax to a state. There's got to be some trigger that starts nexus or this obligation. And prior to this ruling, that trigger was based on a company's physical presence. Let's call it the physical presence doctrine. That physical presence doctrine had been in place for like 30 years. And what it was a ruling that said a company will have nexus or an obligation to collect and remit to a state if it has a physical presence in that state. Physical presence being product, people, or buildings in that state. So pretty much cut and dry. You have product, people, or buildings, you have nexus to that state. But that didn't make sense after the internet came along and people could purchase online. It wasn't fair to merchants in states that had a brick and mortar sales presence when a company that has an e-com presence only, like Wayfair, comes in and sells against them. Wayfair had an advantage because they didn't have to charge sales tax because their method of selling didn't involve a physical presence, whereas the merchants in that state who had brick and mortar sites, they did. So Wayfair had like an 8 to 10% a competitive advantage for a few years. So South Dakota noticed this and said, hey, this isn't fair to our brick and mortar businesses. So they brought it to the legal system, and we didn't think it was going to go all the way to the Supreme Court, but it did. And the Supreme Court sided with South Dakota, saying that the physical presence doctrine isn't really fair anymore, and let's move that to a secondary determinant of nexus. The primary determinant became this thing called economic nexus. What it's saying is that the primary determinant for nexus is how much revenue a company sells into a state. So what's happened now is that a company's customers determine whether the company has nexus into a state. It's no longer whether you have a physical presence in the state that's primary. So what is the bottom line on this? Well, let's take a step back and look at the tax compliance process. It's a pain in the neck for any company. It's burdensome. Someone in accounting or a team of accountants has to keep track of over 12,000 tax jurisdictions and over 250,000 tax rates, all of which there's at least 20% that are changing every year. There's tax rules that vary from state to state. It's a very difficult process to manage. And then you layer on top of this new ruling called economic nexus, and this is what it does. In the economic nexus world, the state has to determine a threshold that if a company crosses that threshold, then they now have nexus or an obligation to the state. The Supreme Court didn't set a standard or couldn't set a standard threshold from state to state. They left it up to the states. So what you have is this menagerie of economic nexus thresholds that are exemplified here by the different colors. The dark orange states have a $500,000 economic nexus threshold. In other words, if you sell over $500,000 into California, Texas, and New York, you now have nexus in those states. The lighter orange color, $250,000. The still lighter orange color, $100,000. So it adds another layer of complexity onto an already burdensome, error-prone process. And here's the hidden gotcha in all this. And I know a lot of companies out there, companies in this audience are probably selling tax exempt. Maybe not completely, maybe partially, a partial portion of their sales are tax exempt. But a lot of firms assume that the Supreme Court ruling has to do with only taxable sales. When in reality, if you look at all the states here in gray, I think it's like 46 states now, include tax exempt sales in their thresholds. So what does that mean? That means a company might trigger economic nexus in a state and not realize it because they're not counting their tax exempt sales. That's a big mistake. Then so they might have nexus into states that they don't realize. And then if they do trigger a nexus obligation, they're still selling mostly tax exempt, so they don't have to all of a sudden register to that new state, but they have to file $0 returns, which can be a real pain in the neck for a company that's not used to dealing with tax compliance. Someone in the accounting department has to learn on how to talk this new language and has to explain to their distributors why they have to all of a sudden collect exemption certificates from them. And they never had to in the years that they've done business in the past. So they'll have to collect those tax exemption certificates, and they'll have to file $0 tax returns. It's a true gotcha. And another reason this is what I'm calling a gotcha is because exemption certificates are the first thing that an auditor will look for in an audit. Why? Because they know if a company is managing exemption certificates manually, there's going to be error. That's human error. They're likely being maintained as shared folders as PDFs on a shared drive, or they're in someone's closet as paper in a banker's box. So an auditor will walk in and say, okay, I want to see a sampling of your exemption certificates, knowing full well that within that sampling, the auditor is going to find missing certificates, out-of-date certificates, forms in there that aren't even exemption certificates, and forms that are in there, but they're invalid for one reason or another. So the auditor is going to come back to the business and say, okay, I found an error rate, and they'll say 1%. The auditor can then apply that error rate across the company's entire sales going back years. So imagine what the bill will be if you take 1% of sales for a company going back 5 or 7 years, and now the company has to pay the sales tax on those sales. That's a six-figure gotcha that is a lot of companies don't think about. It's often overlooked.
Hey, John, if I could just chime in for a second. I think you hit on Manually collecting, validating, and maintaining exemption certificates for your many customers can be a strain on your business. Avalara Exemption Certificate Management, or ECM, automates certificate management by identifying certificates that are missing or expired, automatically sending requests to your customers, and reviewing new certificates as they arrive. It's easy to get compliant and stay compliant with Avalara ECM. It can be used as a freestanding platform in combination with AvaTax for real-time verification and calculation, or to integrate with other tax calculation engines. ECM allows you to request certificates from your customers by sending a link to Avalara's secure online certificate portal, where they will be walked through a simple process of selecting and creating the correct certificate for their business, dramatically improving certificate accuracy and allowing them to manage their own certificates. Bulk and automated email campaigns are easy to set up
they have the compliance processes in place
and help collect certificates that are missing, invalid, or about to expire. As a business, you're responsible for making sure certificates are valid, which can be difficult to determine. If they're not, then the tax liability falls on you, not your customer. This is why ECM's validation engine with optical character recognition is so important in this process. For many standard forms, ECM scans the image, confirms the certificate type, then digitizes the data.
Here's a video.
Manually collecting, validating, and maintaining exemption certificates for your many customers can be a strain on your business. Avalara Exemption Certificate Management, or ECM, automates certificate management by identifying certificates that are missing or expired, automatically sending requests to your customers, and reviewing new certificates as they arrive. It's easy to get compliant and stay compliant with Avalara ECM. It can be used as a freestanding platform in combination with AvaTax for real-time verification and calculation, or to integrate with other tax calculation engines. ECM allows you to request certificates from your customers by sending a link to Avalara's secure online certificate portal, where they will be walked through a simple process of selecting and creating the correct certificate for their business, dramatically improving certificate accuracy and allowing them to manage their own certificates. Bulk and automated email campaigns are easy to set up. And help collect certificates that are missing, invalid, or about to expire. As a business, you're responsible for making sure certificates are valid, which can be difficult to determine. If they're not, then the tax liability falls on you, not your customer. This is why ECM's validation engine with optical character recognition is so important in this process. For many standard forms, ECM scans the image, confirms the certificate type, then digitizes the data on the document and tells you whether the certificate is valid. If ECM determines the certificate is invalid, it will send an automated request for a new certificate from your customer. This automated validation reduces errors and improves compliance, helping to decrease your overhead costs. Avalara's ECM products are the best-in-class solution in exemption certificate management, setting new industry standards. In addition to providing the best security practices to protect customer data, other key features include automated tax ID verification for supported states, a forms and tax content help library, integrations with over 35 accounting and e-commerce platforms for easy customer management, integration into leading third-party tax engines, and tools that help you collect certificates at the point of sale and get them verified in real time. If you would like our team of experts to manage your exemptions for you, ask us about ECM managed services. Whether you're a small business or a large enterprise-sized organization, we have a solution for you. Learn more at Avalara.com.
Thanks, everybody. I hope you enjoyed that video. Pretty much nailed everything that is good about automating exemption certificate management. So why are auditors interested in performing audits? Why is sales tax so important? It's because sales tax is such a big piece of the revenue pie that a state has to work with. It's almost 50% of the revenue coming into a state. So it's an obvious target for auditors to look at. And auditors are getting more aggressive. They're hiring in record numbers. States are communicating about taxpayer data. And it's no longer really a situation where a company might get audited. It's more like when they're going to get audited. So it's good to be prepared. So let's talk about how we can be prepared and how to streamline this process and keep the auditors at bay. 5 steps. The first step is that you need to know where your business must collect and remit sales tax. You need to know your nexus. Nexus comes in many flavors besides economic nexus and physical presence, which I discussed previously. You can create nexus by, I think our slide is missing some, here we go. Funny, it had a delay there. But these are all little methods that you can, or ways that you can create nexus that a lot of companies aren't aware of. If you have an investors board meeting in a state, you could create nexus by doing that. If you go to trade shows and you conduct business, you can create nexus in that state. If you have marketing and web advertising and partners in a particular state, again, you can create nexus. So there's a lot involved in nexus. It goes beyond economic nexus and physical presence. Here's some interesting stats about nexus and companies' awareness of it. 98%, almost all companies are actively involved in one or more nexus creating activities. Again, almost all companies have misconceptions about how nexus is created. And why do you want to automate this process in the first place? Why do you want to know your nexus? It's because it takes up, in a typical SMB, it takes up almost a week of an accountant's time trying to keep the company compliant manually. That's a lot of time spent on an activity that brings no revenue, it brings no value to the company. It brings value to the government, but not necessarily to the company. So we would like that very talented, very skilled person in accounting or team of accountants to be able to use their time in a way that would be more valuable to the company. So here's a suggestion we have that would help you know your nexus. We're offering a free nexus analysis or sales tax risk assessment. There's a link here, and there's a link in the resources at the bottom of the slide here. And you could also click on this link when we distribute a PDF of this presentation after we're done here. But what this involves is a look at your overall nexus. And you're going to want to be prepared before you take the assessment. You're going to want to take a look at your sales transactions for a year that are coming in from all your sales channels, your e-com, your sales, your ERP sales, your point of sales transactions. And then you can input this into this assessment tool. And then that might take some time. So you can stop and start the assessment as you're gathering data. And then once you're finished populating the data, 3 days later, you would get the assessment. And then you get an invitation to talk with one of our tax consultants to go through the findings to make sure that you understand them and have a good basis for making decisions on those findings. The second step involves taking those findings and making decisions and taking actions. What's interesting about that nexus analysis or sales tax risk assessment is that we find that a company will learn that they have 4 to 6 times more nexus obligations than they thought they had. That's a real eye-opener for a CFO or controller. If you can imagine, they've got this already burdensome error-prone process, and now they're obligated to 4 to 6 more times or more states than they thought they were obligated to. That's why our phones are ringing off the hook, because the process is difficult enough. Once you throw this new nexus that started way back when the Supreme Court ruling into the mix, and you make it so much more difficult, companies are saying, we really have to take this and automate it and take it off our hands because we can't do it right. And so when you look at that data, then you have to decide, okay, which states do I want to register in these new states that I now have nexus in? And you want to be very strategic about that. If you have a lot of exposure to any one particular state, you don't want to just register right away, because that's giving the state a heads up saying, oh, really, you're going to register now? Let's take a look at everything going back several years and why you weren't paying us sales tax over that time period. So it can be a costly mistake. So we can help you with that, and so can your CPA. We can go in and do what's called a VDA, or voluntary disclosure agreement, where we will represent you to those states where you have significant exposure and negotiate down that exposure in exchange for the state knowing about your company and you registering for it. So you do want to be very strategic when you make decisions about where and when to register. Step 3 of the 5, you need to make sure that you're calculating the correct sales tax amount. If the tool that you're using to calculate the sales tax is based on zip codes, it may not be that accurate, because zip codes and tax rates really shouldn't go together. Zip codes exist to get the mail delivered on time. The only reason that they're tied to tax rates is that before the internet, that was the easiest way to determine what a tax rate is. A company or the tool would look at the zip code, and within any zip code, there could be multiple tax jurisdictions or multiple tax rates. The tool will then pick the highest tax rate within that zip code and apply it to the sales transaction. What happens is that highest rate may be more than what the consumer, the buyer, should have paid. And so there could be a complaint. Why did you charge me more tax than you needed to? Or it could be off on the other end of the scale and not be enough tax calculated and sent to the state, and the state could say, how come you're underpaying us? So you want to have a tool that calculates the tax rate based on latitude and longitude, believe it or not, getting right down to the rooftop of where the products are being shipped from or shipped to. And that will tell you exactly what tax jurisdiction you're dealing with and exactly what tax rate applies. Step 4, like we talked about before and in that video, you want to track and manage your exempt sales. You want to make sure that there's no invalid forms in there, and that all your exemption certificates are valid and up to date. And you can do that manually and take the risk, but please know that, like I said, it's the first thing that an auditor looks for, or you can automate that exemption certificate management. And step 5, you need to be ready for when the auditor comes knocking. You need to be able to generate reports and remit the sales tax to the tax authorities, and you need to be able to do that right. If you're trying to do this all manually and you're bringing in data from all your different sales platforms, your ERP, your e-com, and your point of sale, bring them into it. It's just difficult to report on because you've got all these different sources of data. If everything came into one data warehouse, one point where all your sales transactions are, and you can report from that, it makes the reporting process a heck of a lot easier. It satisfies the questions that an auditor will have very quickly and allows you to remit your sales tax returns promptly and accurately. So here are the 5 steps, just in summary. You want to understand where you have sales tax obligations. You want to know your nexus. Secondly, you want to be very strategic when you take that nexus data and you decide where you're going to register, which states you're going to register in. And then you want to make sure that your tool calculates the sales tax accurately. And you want to be able to track and manage exempt sales. And then finally, we want to be able to remit your sales tax and report accurately and promptly. Now, here's some tips to streamline your tax compliance process. First of all, why would you want to do that? But bottom line, it's money. It's the typical SMB is spending about $63,000 employing accountants to keep the company compliant manually. If it's a much larger enterprise type size company, it's probably a team of accountants, and that the cost annually approaches $400,000. That's a lot of money that is being paid to people to keep a company compliant manually when they could be something that could be doing something that would bring in more value to the company. So, Evan, you talk to this slide a lot better than I do. I wonder if you could touch on this.
Yeah, I appreciate it, John. I think you kind of already covered this. It's a little bit redundant. I'd like to get into each products. I guess I want to acknowledge the fact that we've hit the bottom of the hour. So I guess I'll go ahead and go through it really quickly. But Jared, let us know if we need to wrap up. But essentially, this just ties the 5 pillars of compliance that John just mentioned to kind of what Avalara offers to do to help automate that process for you. So the where and why John covered with the Nexus study, and that's really a first step for a lot of businesses, just to understand what the landscape is for their business and what they need to do in order to make sure they're in the right places. And then Avalara can actually offload the registration process for you as well. And as John mentioned, being strategic about where you register, sometimes companies will find themselves in a position where this Nexus analysis exposes that they did in fact have business that was that required they collect tax and they hadn't been doing it. So then you want to talk about how you want to approach those states and what kind of level of risk you want to continue to maintain. So some customers want to just use us for a service called voluntary disclosure agreements, where we can approach a state or jurisdiction anonymously and pre-negotiate a resolution. And sometimes they want to continue operating kind of under the radar and hope that it works out that way. And that's a choice the business has to make, but we can help with that process. Ultimately, then calculation is handled through Avitax. That's what everybody knows us for. If you hear the name Avalara and you're familiar with this, you probably think, oh, that company does sales tax calculation, and where that's kind of at the heart of our solution. And that's what would track all those taxation decisions. And then John showed the video and talked at great length about tracking and managing exempt sales, and that's a great place to automate, especially for the manufacturing and distribution spaces, since so many of your customers tend to be exempt customers. And then ultimately offloading that process of preparing the various tax returns and submitting them to the states on the customer's behalf.
Thanks, Evan.
Mm-hmm.
So at this time, are there any questions?
Awesome. John, Evan, it looks like we had a couple questions come in here. I'm going to go ahead and put the first one forward for you. So give me one moment here. Oh, there it goes. My apologies. It looks like it just went up there now. So the question is, how does the free sales tax risk assessment work?
Great question. You just click on the link and you'll be asked a number of questions about your sales coming in from your different sales channels and the sales into which states. And so you'll go through the process, and you don't have to complete it all in one try. You can stop and start as you gather the data. And then after you populate all the data, then 3 days later, you'll get the report. And then you'll be able to also talk with an Avalara consultant. And she will walk you through that report so that you can have a good understanding of it and help you to make a decision on what the next steps are to make.
Sure. And speaking of decisions, the next question is asking about how is Avalara itself implemented?
Great question. One of the great things about our partnership with Aktion is that Aktion is certified to implement Avalara. So those same people who provided the white glove treatment in the ERP implementation process would be handling the Avalara implementation. I think that's a great idea because there's knowledge there. There's a relationship there, which cuts down, if there are any issues, it cuts down on finger pointing. The trust is already established. So you're working with people whom you already know. So we do connect into all of the solutions that Aktion provides or sells. So the connectors or the integrations are already pre-built and have been in use for years. So the implementation process is relatively streamlined and easy because of those reasons.
Awesome. The last question I see in the queue at this time, John, I'm going to go ahead and push that live now, but it's asking, how much does Avalara cost?
Sure. Our pricing is based on usage, or how many times, in the case of AvaTax, how many times a company will ping our cloud to get a tax rate in the Nexus states for a company. So how many times a company will give us a sales tax transaction in a year in their Nexus states. As far as the tax returns process, likewise, it's based on usage. It's how many tax returns would we have to process in a year? And same with exemption certificates. How many exemption certificates would we have to manage across the company's landscape?
And then just to add on to that, it's all based on tiers. So as your company is, if it's a smaller company, the pricing is going to be on a lower side. And then as that company grows, the pricing model grows with them and offers economies of scale. As you use this more and more, the per transaction or per certificate rate reduces.
Awesome. Thank you, John. Thank you, Evan. I'm checking the queue one last time. I want to make sure we hit all those questions. Looks like that's all the questions that I see at this time, though. So I'm going to go ahead and advance the slide here forward. So I do want to thank everybody for joining today's session. I do have up the marketing email address up there if anybody has any questions about that in general. I want to let you know that your Action sales rep is going to be following up with you after this presentation today. So they'll be directly following up with you, be able to get more information from them as well. That email address, if you don't know who your Action sales rep is, you can go ahead and send that an email. We'd be more than happy to talk you through and get that who that is too. But I do want to ask at this point in time if there's any final remarks that either John, Evan, or even Terry had for us at this time.
Just thank you. We appreciate your time today.
Well said.
Awesome. All right. With that all being said, I'd like to again thank everybody for joining today's session. I truly hope that you found value in it. Sorry for going a little bit over here, but again, this was some important information we wanted to share with you guys. So again, thank you for joining today's session. Hope you found value in it, and take care.